Okay, good afternoon guys. Welcome to this live trading clinic. We're going to focus on the Bank of England minutes today. So this is really an opportunity, although we don't really think or expect anything's going to happen today. The 44 economists that have been out in the market have all gone for unchanged at 0.5. But I think that more importantly, what I'll try and demonstrate in this session this afternoon is how we interpret what's said from these Bank of England minutes. My views are again quite strong. I believe that the US is still leading the way, but unfortunately it's still kind of hemmed in by its strong statements and has to keep interest rates artificially low till 2015. The ECB, in my again humble opinion, I don't really think they know what they're doing, to be honest. They're always last to the party, and Mario Draghi has been a massive letdown for me. So we've got Mark Carney, first foreigner in 319 years, taking the position of Governor of the Bank of England. What's going to happen? Interesting stuff, guys. Let me get through the slideshow as always, and then we'll have a chat and see what you guys think. So, risk warning, guys. Spread betting and CFD trading both carry a high level of risk or capital, can result in losses that exceed your initial deposit. They may not be suitable for everyone, so please ensure you fully understand the risks involved. The information and comments provided herein under no circumstances are considered an offer or solicitation to invest. Nothing herein should be construed as investment advice. The information provided is believed to be accurate at the date of the information is produced. Education only, again guys. Content of the webinar is personal opinion of the moderator, not Intrade.com. Content does not constitute financial investment or tax advice. Intrade.com does not accept any liability of the content and comments made during this session. So what we're going to cover, as always, live charting analysis. Okay, we've seen a gap in the FTSE, so we'll go through that, see what that means for the markets. Multiple time frame trading. Okay, this is how I trade. I'm in talks with Reuters and Metastock right now, so you lucky people might actually be able to have access to my system. How crazy is that? Fundamental analysis, again, all the things we're going to talk about today, what the hawkish, dovish comments mean, if they're bullish, if they're bearish, trying to really decipher what these guys say. It's almost like listening to a different language. They'll never just come out and say it, okay? Everything they say is always guarded and coded, so I'll help you understand what's being said. Live, real money trades, if I hear anything decent, I'll trade. I've not traded for a while on these live sessions. No real reason, to be honest. I just haven't really kind of felt it. You know, I felt that it's more interesting to kind of, you know, talk through and you know, let you guys, you know, see what's happening in the market more than focus on my trades. But I'm going to go back to that. I'm going to put some more money in my account. I'm going to start trading quite big size to make it a bit more interesting for me. Q&A, any questions, as always, guys, these are open sessions. Ask me anything you want. Anything you want on any product or anything. You know, I'm here for you guys, as always. Good to see Pan on Fire. He's got one eye on the tennis. Well, Andy Murray's he's through to the semis, so I guess that keeps the love-hate relationship for England and Scotland alive. But yeah, good so far. It's been interesting. Just the women's tennises, I don't really recognise any of them names. Well, that's a little bit strange. But there we go. Today we're going to focus on Mark Carney and the Bank of England, so tennis is going to have to take a bit of a back seat, unfortunately. So as I was saying, you know, my views are very... not very out there, to be honest. I'm just very open, and I really do believe that the Fed have, you know, made strong more policies and stuck by them. Whatever you say about Ben Bernanke, you know, he doesn't want to be in the post anymore, so he's trying to leave, you know, his position tenable for somebody else to take over. You know, at the end of the day, he's just a man. He served the US well. I think the guy's tired. I think he needs a break. And let's face it, it's been a tough 4 or 5 years in the markets for most people. I'd said about the ECB, Draghi's been a massive letdown for me. He's always last to the party, last to cut interest rates, talking nonsense like negative deposit rates in Europe. That'd destroy Europe. You know, the euro is flaky at the best of times. We know we're trading right slap bang on the fundamental 1.3000 level, as we can see in the top left of my chart. So we're just ranging, okay? We're not really aggressively closing below that. We're not making any trends upwards, are we? So I mean, again, the euro dollar, when it's trading like this, I just stay out of it. The whole point of having a setup like this, guys, you know, when I switch the screen in the morning, this is what I look at. Okay, these are all the things and the only things you need to look at. Okay, that's 10 years. 10 years of looking at charts for 8 hours a day. This is it. It boils down to these 8 screens. If these aren't moving, you know, stay away. Go and watch the tennis with Pan on Fire. You know, all these things, if any of these are moving, these are going to give you an indication that a trade is up and coming. So we see the S&P, you know, nicely, you know, making a break higher. The dollar, you know, again has broke this technical level here, this trend line we drew in a previous webinar, and it's come back down. I mean, again, you can see it acting, you know, between these dotted 50% Fibonacci levels. I mean, trading sometimes becomes not easy, but when you've got a setup like this and you're used to looking at your screens in this way, you know, how can you do anything else? You know, how can you not buy at these levels here? You know, how can you not sell at these levels up here? I mean, it becomes boring sometimes. But again, it's how you view it and how you get involved in the markets. Again, the Aussie dollar, key lines, you know, that keep being hit. It's no surprise, time and time again, all these dotted lines that are higher time frame points of interest come to play in the market. It just isn't. You know, I haven't found another way of trading consistently, you know, that ties in the principles that I keep telling you. Monthly, weekly, daily points of interest on the hourly charts. You know, you've got such a better view of the markets. You know, it really is. It's heartbreaking, you know, when you speak to new traders or people that believe, you know, they've got this magical edge and they're using Ichimokutu clouds, you know, with a 15.5-day moving average. I mean, just, you know, what can you say to these people? You know, there's nothing new in trading. You know, I did exactly the same as everybody else. I tried to reinvent trading, and, you know, it cost me money. And then I stopped reinventing trading. Did what everyone else did when the market was trending, and there we go. You know, that's why I'm sat here today. But anyway, as we can see, the market is trending upwards. Again, I'm still fairly bullish the dollar, so I'll be looking to buy any dips down here. So I've got a little simple screen set up for today's announcement. So we can see this gap in the FTSE here. Markets don't like gaps. They certainly don't like double gaps. Okay, so this will have to be filled at some point. So we've just got the hourly and the 15-minute chart. Again, we've seen a bit of a rally, you know, yesterday evening, and kind of spiked up late on last night and early this morning. But we've kind of recovered. So again, if you want to understand where the pound's trading against the dollar, what's the first thing we do on this particular formation here? Okay, that's right, Fibonacci. From the low to the high. Okay, so where's the market trying to hit? It's trying to hit that key 50% level. 80% of the time, a strong directional move will hit 50%. Okay, hasn't quite made it there, so all that tells me is there's still upward momentum in the market. So what we need to do is close above the 38.2%. We're in about here at 1.52370. Then the market's got natural targets of 15672. That's how you trade. Okay, no more complicated than that. Close above here, market's going to get to here. That's 30 ticks. Yeah, if it doesn't, it's going to hit 50%. If it breaks 50%, it's more likely to hit the 61.2. So we close below it, break through here, you've got 19 ticks, 40 ticks down to here. So, I mean, again, you use that for your stops. If you think it's, you know, that's not really kind of an accurate trade, that'd be a one-to-one trade. But really, if the market is breaking through the low end of the Bollinger Bands, these are your targets down here. The Bollinger Bands again are rejected. We've closed out twice them here, so it's more likely for me when this upward sentiment is going to continue. So close with 38.2. The market then hits the moving average, which what a spooky surprise, not. Ties in with a 23.6 Fibonacci retracement. And if we do that, from that point, we make a higher high. Simple. When it breaks through the high, the previous high, it's going to hit 153447. It can't do anything else. Okay, it cannot do anything else. That's just the charts telling me what it wants to do. So again, guys, you know, this isn't some magical secret formula. This is just what's happened in the past, these lines. So that will happen in the future. So it's all going to revolve around the 38.2 and the 50%. Okay. So different story in the FTSE. We've gapped up, so we've left this gap here of 22 ticks, so some point when the market recovers, it will look to close and fill that gap. You know, gap trading is one of the most consistent ways of making money. Sunday night gaps at 10 o'clock. You know, again, get your charts up. You'll see some gaps in markets and trade them. The market wants to close them. Okay, so it's simple as that. So we've seen this gap in the FTSE here. That's telling us that, again, green candle, thinking about it, bit of a bullish flag, really. Okay, market then breaks up. 1, 2, 3, 4 green candles. Where's the next point of interest? Okay, well, got quite some way to go. Top end of the Bollinger Band, and then all the way up to 6393 spot 5. Excuse me. So, the market's clearly in an upward trend. Is that to do with what's going to come out of the Bank of England? Highly unlikely. Okay, all 9 voting members are going to keep quantitative easing and interest rates unchanged. So, there's been no surprise there. The only thing I will say is that, again, I've said in previous trading clinics that I do believe that Bank of England and Mark Carney will be the first of the G8 to act on interest rates. Now, my kind of reasoning behind this is that someone's got to do it. Okay, we don't claim to be, cleverer than the Bank of England or the policymakers, but we're people. We live in the real world. Target inflation has been way above the expected target level for years now, and that can't continue. Okay, inflation is it erodes the value of money. So we can't have that forever. So the best way, and really the only way we know of controlling inflation, the CPI and the PPI measures, is by interest rates, and they have to come up. So we all know, it doesn't take a rocket scientist to know, that we've got 1.4 trillion, a staggering amount of personal debt. Okay, so no matter who you are, that's a lot of money. So even if the interest rates go 0.25 or 0.5%, or more likely, I reckon within 2 years we're going to be at 1.5%. Okay, so that's going to make a massive difference to people servicing personal debt, and also people with huge mortgages. You hear these horror stories of people with interest-only mortgages, and people with borrowing 10 times their salary and all that kind of nonsense. That's out of my control. I can't control that. But what is going to happen is that people are going to seriously struggle to service their debt when interest rates go up, and they will do. And people are still scrambling to get on the property ladder. Again, my sister, again, she bought a house in London fairly recently in the last few weeks, and I was absolutely just unbelievable the price that was paid. Again, it never surprises me that people keep finding value in the city, but they do, and people still want to own houses. I've been there, I've done that. I sold all mine years back. I'd rather sit on the money, and do other things with it rather than hold it in property. It's just whatever, it's one of these things. But you've got to kind of time these things up and scale them up. There's still people that all they look for is to make money out of property, and they see it as bricks and mortar. It's a generational thing. It's almost like my parents and they saw it as their right to own their own house. I mean, how will that continue in the future? It just is. People just won't get 10, 15, 20%, of their, of mortgage capital together to buy a house. All the students coming through into the market now have to pay for their university, starting life with £30,000 of debt. Where are you going to find 20, 30, 40,000 pounds to put down in the house unless your parents give you? You're just not. So the trouble is, it's a tricky thing like that. But anyway, that's by the by. What we're talking about basically is the interest rates have to rise, and I believe that the UK being in control of its own monetary policy, in control of its own decisions, is more likely to do it first. Draghi's going to sit back, or whoever ends up running the ECB. Nobody really cares about Europe anymore, to be honest. For me, all the kind of fear's gone. The fear's gone out of Europe. It's just a ticking time bomb. It's going to blow up at some point, and the markets will be there to pick up the pieces. Interest rates are not going to save the European Union. Again, I was speaking to Reuters yesterday, and they keep looking for bounces, and it gets a bit frustrating talking to these people because they're just journalists. They're not economists, and it's like I keep sending them articles about unemployment spiraling out of control. Places like Sweden, you never hear Sweden in the news, do you? Never. Because Sweden is sensible. They pay the taxes, they have a good standard of living, and they just crack on. But Sweden, highest unemployment in its history. Sweden are now coming into the news to say, that they're going to have to, tinker with their policies and try and, stimulate the economy. This is revelations. This is when you know you're in trouble. It's not about the Spanish running around. We don't know what's going on. No one cares about the Spanish. We've been talking about them for 2 or 3 years. The Portuguese, in this, the same situation. But when you talk about places like Norway, Sweden, Denmark, these are solid places. And once they find themselves in trouble, there's no hope for the Eurozone. Yeah, Cyprus, absolutely, Forrest Gal. But who cares about Cyprus? Really, it's 0.1% of the European GDP. I've got more money than Cyprus. Who cares? So it's when the bigger players, the more stable players, come into the market and say they've got troubles. And, let's face it, Sweden and their government are very, very sensible people. So if they're in trouble, guys, what chance has Greece and the rest of them got? Not a lot. So for me, I think the UK really has an opportunity to move on interest rates. And I think it'll be a stealth move. I think, again, Mark Carney's a very clever guy. You know, remember, he's worked for people like Goldman Sachs, and, you know, he's been brought in for a reason. There's a reason why we're in trouble, and we're looking for answers, and we've gone to somebody from Canada, we've gone to somebody, you know, for the first time in 319 years, we've gone to somebody outside, okay, of the UK, to come up with some answers. So he's got every opportunity to shake things up, and that's what he said. You know, he's come in and he's been very open that he's going to change things, and he's going to get involved in shaking up, you know, the institution, and also the way we look at interest rates. There's all these kind of different things about pegging inflation with unemployment, all these kind of things. I'm sure he's got, you know, a lot of clever advisors, and I'm sure there's lots of clever little tricks up his sleeve. But the fact of the matter is, he's left with the same problem everyone else is. Okay, the economy's still stalling. We're not seeing this growth that we were so keen to kind of, you know, to save us, and we're still left with the same problems. You know, the interest rates need to be, you know, controlling inflation, because inflation is still ramping. So we could just see on the charts that the pound again is finding a little bit of strength. So again, it's going to test these levels up here. Absolutely guarantee it's got nowhere else to go. But what do you guys think? I mean, that's my kind of my two penneth. What do you guys think about you know, what's happening in the world? I mean, have you got any views on Europe? Have you got any views on the US? You know, do you think that the UK may move on interest rates sooner than anybody else? I mean, you guys, you know, again, you trade every day. You've got your own opinions. You know, Forex Gal, Chris, Pan on Fire, you always have something to say. Ian, anything you guys, you know, what do you think? Okay, yeah, it depends what Carney has to say. Okay, well, again, this is first kind of, you know, his first kind of real chance to put his statements across and to set his stall out. So I don't think he'll be overly aggressive, but he's got to say something, hasn't he? I mean, you know, you don't get paid what these guys pay to sit down and say, yes, we're in a mess. You know, this guy has to come and has to, you know, bring some confidence back into the markets. So again, I think that's what we're looking for today. We're not looking for any real definitive answers, because we're 99% sure that interest rates won't move. We're 99% sure that quantitative easing will remain at current levels. So what we're going to do is have to read between the lines and see if Mark Carney sets his stall out. Is he going to be dovish? Is he going to be bearish? You know, hawkish? What tone is he going to set? And that's what the markets will pick up on. So it's almost like being a detective, reading between the signs. I mean, again, Jean-Claude Trichet, who's someone you can respect from the ECB, was an absolute master of this. The number of hours I sat listening to that man, you know, are just unbelievable. And I ended up, I have a love-hate relationship with people like that, because you know what they're trying to say, but they'll never just come out and say it. Okay, so it's almost like you have to preempt what they're trying to say and understand and try and weed out the underlying, you know, kind of message that he's trying to give us. So we're going to have to do that with Carney today. He's not just going to come out and say, yes, I'm going to do quantitative easing until infinity. He's just not that kind of person, and the Bank of England just don't do that kind of stuff. So what he's going to say is probably that they're going to look at measures, you know, to continue to stimulate the economy. They're going to do some interesting things with unemployment. They're going to keep an eye on inflation, make sure that it's, you know, again, that it's under control. But it's what we have to understand, very much like Ben Bernanke said when he hinted there might be a possible tapering of quantitative easing that sent the markets into a spiral down. All these little tiny things we need to look at. Because if Carney hints at all that he's going to be looking to increase the stimulus, that's going to send the markets rocketing, and that might be an indication why we've gapped in the FTSE today. But again, if he says anything along the lines that, you know, quantitative easing may be tapered to any minimal point, then that's going to send that market down. It's going to close the gap, and it's going to hit 614, and maybe get down to 6,000 if he said something like that. Yeah, absolutely, Pan on Fire. So never sure how much of the price is already factored in. Absolutely, the fact that we've gapped higher in the FTSE, maybe, you know, something's been leaked, or maybe people just think that he's going to come with a positive statement. I mean, if you're new to the job, you're still a man. You don't want to come to your first job, do you? You know, your first statement in office and say, nah, do you know what, it's going to be a bit of a difficult one, this, I think I'll just take a bit of a back seat. You know, think of the analogy when I wrote an article about Mark Carney about a year ago. You know, Sven-Goran Eriksson being the first foreigner to be an English manager. And the kind of, you know, it was kind of a shock decision at the time, but then everyone got on board and England started to play really well. You know, it didn't do anything as always, but there was that, you know, initial spark, that momentum. So this is the similar kind of scenario. We've got somebody exciting, somebody different, somebody who's, you know, can be a little bit more clinical. He's not British, he hasn't got British ties, he's not, you know, he's not institutionalised. He's a fresh pair of eyes. So he might just come in and say, listen, you know, listen guys, you've got yourself in a right mess here. I'm the man to sort this. Here we go, you know, follow me, we're off. And that could, you know, lead to a massive rally in the stocks. As far as Scout is saying, student loans in the US went up. Bad press, no jobs to pay back the loans. Yeah, I mean, the whole point of, you know, burdening people with debt when they leave the job market is just crazy for me. You know, I really don't understand it. I think, you know, I thought that the free education was one of the most powerful things we had in the UK. Very disappointed, really, to be honest, that we're saddling people that come into the world with 40,000 pounds worth of debt, and then they've got no jobs to go to. It's not that they don't have jobs to go to. It's they're never going to get the kind of jobs they want. I mean, you know, students, you know, rock out of university now with the degree in, you know, foreign studies or whatever, and it's like, yes, well, I want to be a journalist. Okay, well, you start on 20 grand. That doesn't sound good. All right, I want to be a research assistant. Yeah, you start on 25 grand. You know, these people are not going to walk in to jobs, you know, that are highly paid because they haven't got the experience. But then you can't get an interview for these jobs without a degree. So something's missing in the world. You know, something's missing in the way we've structured society. That, you know, if you have a degree, you can't get a job because you've got no experience. If you've got experience with no degree, you won't even get through the, you know, the interview process because you've got little HR monkeys, you know, ticking boxes. And if you don't have a degree, you can't get a job. I mean, I don't have a degree. And my first two jobs were graduate positions at places like PricewaterhouseCoopers and Revco. Why? Because I was the best. I was the best at what I did, and I had the spiel, I had the talk. But the world was a different place 10 years. So these days, you know, you can't even get to speak to these people and have an interview to put your message across if you don't have a degree. So I really do feel for people that have degrees, and it's going to be a tough learning curve. But again, it's like anything. People will always find a way, and there are always jobs. But people have to realign their expectations. I don't really think that society helps us with monkeys like Wayne Rooney and people, you know, on £250,000 a week. You know, a week to kick a football. I mean, these things are just crazy. And these people are our children's idols. You know, how have we let these things happen? You know, how have we let, you know, the sporting icons and film stars be our role models, and, you know, nobody wants to be a fireman anymore, no one wants to be, you know, a vet, you know, which are great jobs, you know, much needed in society, and still hold, you know, a decent wage. You know, what's happened to people's expectations? It's just been completely out of kilter, and I think that's what we need to get back as a society before the markets can start acting rationally again. So, again, you know, we can only really focus on what's going to happen today and what's going to happen, you know, in the markets. And I think, again, I don't know, I'm all primed for things to go up. Okay, I'm still very bearish, as you well know, the euro and the eurozone, but I still think that the UK is still a great place to live, and I still think there's a lot of opportunities there. So, just based on that pure fundamental, you know, higher view, I think that the FTSE is still, you know, going to be, you know, buying these dips and finding value. Okay, you know, we've had the natural correction. Okay, we all knew that stocks were overpriced, so we've had that natural correction, and we're trading at more reasonable levels. So any people that have been short have taken the profit, any people that have been long are well out. So I think the market's now going to recover and start on a good bullish trend, and it's going to be till Christmas. I think from now on the market's going to go sideways probably for the next kind of month or so while people are on holiday, but then in September, October, you know, the market's going to kick in, I think, and we're really going to finish on a high this year. But that really just relates to the S&P and the FTSE, to be honest. I'm staying out of Europe for now because I still see a lot of potential downside in more the Euro stocks now than the DAX. The DAX is behaving a little bit more as I understand. But really, I do think the Euro stocks now has some way to drop down. Okay, Ian's saying, heard a very cynical theory that the government loves sending people to university because it keeps them out of the unemployment stats for a few more years. Well, absolutely, Ian. I mean, let's face it, when we talk about cynicism and the government, they go hand in hand, and absolutely. You can see it's all about statistics, isn't it? So all these statistics about people having part-time jobs or having internships or unpaid unemployment gets them off the books. But the fact of the matter is, it doesn't matter. Real unemployment is still real unemployment. We have a massive bill to support people that don't have jobs on the welfare state, and everyone who's on the welfare isn't putting back into the pot. So quite worrying, really, because people get institutionalised very, very quickly, and the fact that we've still got this archaic benefit system where it's more beneficial for people to be on unemployment benefits than get a job has to change. Okay, we have a society where people get more money for sitting at home than they do going out and getting a job. The fact of the matter, getting up, getting a job, getting involved in society, meeting people, that's more important, than the actual monetary aspect. But if someone's going to tell you, you're £100 a week worse off for going to work, who in the right mind is going to do that? So these things need to be addressed, and I think they are being addressed, but these are generational things. They're going to take a long time to filter through into the real economy. I think the main thing is for ourselves to realign our expectations. Again, I'm down to one Ferrari now. I'm really kind of tightening my belt. There's no way, I can justify that in the current climate. No, obviously that's a joke. But I think we all have to, really kind of think about what's better for the greater good. Okay, we need to have in my opinion, solid health system. We're an aging population, so that still needs to be free. We don't want to end up like the United States, where if you have a cold, it costs you £1,000. We need to have a good education system. We need to be, bringing intelligent people into the world and changing things. Okay, and we need to realign our expectations as well. We can't all come out of university and have a £50,000 a year job to pay our debts back and get the house we want. We just can't do that. So all these tough decisions, I think, are being made. And again, that's not down to Mark Carney. Mark Carney is all about the money. It's all about the money today. So we've seen the gap in the FTSE. We've seen the market spike the pound against the dollar. So really, we're just going to strap ourselves in 3 minutes' time and see what happens. Now, this is the first time we've done this, guys. I'm reading out the Bank of England minutes. So again, I've got the squawk on. So I'm going to be listening to what's. So again, it's delay over delay. So it's somebody speaking, me interpreting, me saying what these statements mean. So I'm going to be firing data out at you. I'm going to be firing kind of my views at you. And so let's not concentrate too much on trading today, because we don't think anything's going to be particularly unexpected. But what we're trying to do is understand the underlying views of Mark Carney and what knock-on effect this might have in the markets. Okay? So yeah, listen to Bloomberg TV, listen to your squawk, whatever you want, guys. Again, it's entirely down to you. I've got the squawk on, so I'm going to be reading out what I think's key. And again, I mean, everything will be a buy, or sell, sell. It'll either be good news or bad news. Okay, so we've gapped up, so bad news is going to be better for trading because we're going to see people get out of positions. But again, we'll see if it's bullish, bearish, dovish or hawkish. And, let's just listen to it for the next 10 minutes and see what happens. Like I said, it's the first time we've done this. It's always good to do new things, to test the boundaries, and let's see what happens. So, only a couple of minutes, guys, so have an idea in your head. If you were Mark Carney on the first day of the job, what kind of things would you be saying to give yourself a positive edge for people to have faith and confidence in the policy changes that you're going to have? Remember, he's got 9 voting members that he needs to convince too, and these are old guard, okay, guys have been with the Bank of England for years. So are they going to like the new guy? Remember, internal politics is still very prevalent, and like it or not, these are intelligent people, but they're not like children. So he's going to try and make friends here in the best way he can. So we're just seeing the pound against the dollar see a bit of indecision here, but still we're above this 38.2 level. So any good news, we buy above here. Got clear defined targets up here to 152958, above to 153447. FTSE, it's going to take a look to get to 6393.5, but we'll have to see. We've already gapped. Okay, a minute, guys. Going to be a lot of information, I'm going to say what I can as quick as I can, but be ready yourself, guys. Okay, but 40 seconds now, guys. The call is unchanged. Five seconds. Plan purchase at 375. Okay, we're closing in train. Okay, look at the pound now. The pound's really selling off. This doesn't like this at all. So we've hit the 61.8. The next target will be 1512.88. Market reacting negatively to these comments. Okay, so we're seeing a sell-off in the pound against the dollar. Okay, so look, initial spike retraces 50%. So look to buy at 1954 if the market comes back and recovers. Okay, if it's going to go further down, we've got 151.288. So annual inflation contained in the May report. However, interest rates would weigh on that outlook. So it's saying that interest rates really, there might be a possibility of an upcoming rise, as we thought. So again, inflation's the key here. Mark kind of saying inflation needs to be reported. He's asking for an extra report on inflation. So that's the key. So inflation is the key here, and we've worried about inflation. Then Bank of England has to do something about interest rates. So reading between the lines is that if he's looking at inflation, he's looking at interest rates. Interest rates are historically low. They can go one way high. They go high. Then again, we'll have to see. Higher interest rates should bring people into the pound and should strengthen it. So, but we're seeing a sell-off now because the market is not really liking what's been said in the interim. And again, remember, we've seen the spike up, so maybe we're just seeing some profit taking. Market's struggling to get down to the 100% retracement, but again, a little bit more momentum's coming in the market now. The FTSE's done nothing. The FTSE's gone slightly bid, but it's really in a tiny range. So all the focus now is on the pound against the dollar. We've come down in a straight line after trading for about, yeah, you know, a good dip. Okay, so we're all expecting inflation to fall back further. Okay, so these are the messages that are coming through from the MPC here in the comments. So they're 0.75% now, but we've got a key target here of the 100% retracement of this whole move. So again, I drew that Fibonacci in front of you, so it's nothing new that we know what the targets are. So again, the market really can do nothing from this point apart from hit and retrace to 151.288. It breaks that, it goes down to 151, and again the overextension of 161.8 on the Fibonacci. So again, nothing really kind of moving in the stock market, just seeing a bit of ranging to the upside. But again, very directional move that the pound is really kind of taking a bit of a spanking here. But reading between the lines of all the things that have just been said, I don't really think that's terrible news. Inflation is obviously above target, and they're going to focus on that. But if you're going to focus on that, they're going to bring interest rates up. So if they bring interest rates up, then really more people are going to deposit in pounds. So I'm looking to buy this dip now. Okay, so I need to get all the shorts out of the market first. But I think longer term, this isn't that negative at all for me. But anyway, we've dropped down a point. So we've got some clear targets from where we're trading, 50%, the 60%, and 100%. So if anybody's got short, yeah, absolutely, Forex Gal, exactly what I think. Higher interest rates attract UK money. More money in the UK, the more money we've got to invest and stimulate the economy. So again, that's why I'll be looking to buy dips. I certainly wouldn't be selling this data right now. But again, maybe you've got people taking longer term positions. Maybe you've got people getting out of existing trades. So let's see. Okay, Chris, 30 pips from cable, good man. That's what I like to see. Okay, so edging towards this level here, guys. So what would be a nice trade here is if we see the market hit 1.51288 and we break through. I'd have a little cheeky buy here at 1.51090. Okay, and this order here. Because you see the market break here 100%. It will then go through very quickly. Okay, to this level down here. So I'd have some buy orders down here, and I'd expect it to bounce back up, test this level, and maybe, if we're lucky, get back very quickly to 61.8. But again, there's no point selling now. We're going to have to wait for this hourly candle to really kind of do what it needs to do now. But you know, you got the target. This 100% is trying to get there, guys. So it's going to do one or two things. When I talk about break or bounce levels, it's going to break and it's going to hit here. If it bounces, it's going to get back to here. Can't do anything else. Okay. Pan on fire. Line hitting won't bind the bounce yet. Absolutely. Pan on fire. I'm with you on that. 100%. So interesting, really. Interesting. Nothing really kind of out of the ordinary, as we suspected, for the key interest rates and the talk of quantitative easing. But I think the whole point is that the market's taken from that is that the focus now is all on inflation. And that's really the reason why I started doing Bank of England minutes on FX Street, because I knew the Bank of England was going to be the first one to change. So we broke through 1.51288. So again, that's your 100% retracement of the up move done. So if we break through here, the next target is obviously 1.51090. If it breaks through that, wow, okay, you know, all the way down to 161.8. Can't do it in this candle. Not off that news, no way. So what I'll be looking to is a little cheeky buy on 1.51090. Okay, but let's see how it reacts. It's going to hit it now, guys. Again, you know, it's going to hit it again. It's going to have to touch it. It's going to have to touch it. Yep, there we go. We've touched it. So what does it do from here? Does it break or does it bounce? Okay, that is the question. Does it break or does it bounce? So, again, guys, time and time again, my levels come into play. It's not voodoo, it's not mystery, it's just higher time frame trading. Okay, so we broke through it. So remember, you're going to be getting a lot of longs out of the market now. Guys are going to be, you know, covering the short position. So, got a very, you know, you've got another, from this point here, another 90 ticks to get down there. Is the market going to do that? I doubt it. So it broke through now. So again, guys, remember, when we see things like this, strong directional move can retrace to 50%. I don't think markets can go much further than that. So where would it get back to? It's going to get back to the 50%. Okay? Which is here. Son of a bitch. 1 second. Going to get back to here. Just clean this chart up a little bit. So, okay, so the market is hit and broken 1.51090, but it's only broken it ever so slightly. So you're going to see profit takers coming in. You're going to see the market, as it always does, 80% of the time a strong directional move will hit 50%. So 50% of that down move is 1.51825. I told you that was a good level to buy. I didn't buy myself. I was too busy rabbiting on, unfortunately. But maybe it's a little opportunity to buy now. We get above the 100%. That finds support. So from 100% back to the 50, 54 ticks. Okay, so if you're long from here, yeah, you need to stick until here. You made yourself 60 ticks. So it just goes to show you that there's money to be made on the way back up, as in there is on the way down. So again, the market's trying again to move lower. So still taking this information quite negative for the pound. We've seen a real spike in the FTSE now. So the FTSE, as I said, can really, you know, it's hitting the top end of the Bollinger Band, but 6393 is where the upper end target would be. So I'm just reading some of the news wires now and seeing what's been said. So the Bank of England maintains stimulus as Carney assesses UK recovery strength. That's the headlines on Bloomberg. So again, a fairly positive kind of tone to the articles. So nothing really was, you know, out of the ordinary. But people are certainly seeing this as an excuse to sell off the pound. But I mean, with the FTSE kind of spiking now, I expect this pound to bounce back against the dollar. So yeah, again, I'll be buying back. What do you guys think? Any other thoughts? Anything else you'd like to kind of, you know, take a view on? Okay, Chris. Well, I mean, 30 ticks is not an achievement, but it is. The markets are difficult, Chris. So taking money out of the markets is taking money out of the markets. Profits. You know, you're never going to get, unless you're already short, you're never really going to go into that with any kind of real commitment, you know, to get, you know, 100 ticks out of that move. You're not. So to get a third of the move, you know, a quarter of the move is not too bad. You know, it's got to take the positives in anything, Chris. You know, it's not about how much you make. It's about the consistency you make money. That's, you know, that's the rules of trading. So, like I said, guys, seeing a lot of strength come into the FTSE now. Okay, big levels, you know, and a long way for it to go. So, again, one of these things, interesting. There we go. That's why I always say that it's very important that we use the 20% fundamental, 80% technical rule, and we always understand what's happening in the markets. This was another opportunity to trade fundamental data, and nothing really was said. Nothing really was said, but the markets moved 100 ticks. Okay, so that's how powerful fundamental information is. And anyone who's trading technical now wasn't listening to them comments is out of the trade, and they probably don't understand why. So for me, very important. I'm going to buy now. I'm just going to buy the pound against the dollar. Simple as. Sorry, what am I messing around for? Pound against the dollar. I'm going to go long. Okay, 1 second, guys. Pound against the dollar. What are we trading now? Okay, 1 second. I'm just going to let it test that 100% again, that 100% retracement. And I'm going to buy it. Okay, so I'm going to buy it, and my target's going to be 151.825. Okay, the stop's going to be anywhere below 151.090. So I'm just going to let it hover around now. Okay, because again, you have to be very careful when trading, you know, fundamental, you know, data in a technical manner, because you know, again, it's still raw emotion. It's still people basing decisions on what's been said. But I don't think anything's been said that's been particularly bad. Okay, so market's struggling to kind of break back down. So I'm long now. Okay, I'm long from this point. The pound against the dollar. We've got my target in place here. Okay, so we're going to look to make, you know, 50% of that move back. So we're looking to make 56 ticks or whatever. Okay, so that's the trade. But if the market makes new low from here and breaks out, okay, we're going to have to get out of the trade. But there we go. That's the trade. Okay, Forrest Gale saying the 5 minute looks like it might retrace up. And somebody's asking what the dark blue line is. Dark blue line is current value. Okay, so that's the extremes on the short time frame trading. The blue line represents the shortest period of volatility, high and low. So that's like, again, when we talk about the higher time frame trading, they're the dotted lines. The solid lines are the small time frame trading. Yep, 1.5100 acting as short-term support. Absolutely. Well, as I said, it would. You know, these are my levels, guys. You know, these, you know, they don't lie. So again, we're gonna have to see. You know, again, if this, if the market continues down for that red candle and opens the next candle, hourly candle, I would say, you know, red, then this market is going to go low. But you know, we've taken a trade. You know, maybe we'll have to buy it a couple of times before it bounces back. But I don't think that news has been particularly that bad. So we're testing that line again. So the more we test it and don't break through, the more the market is going to bounce back. But if it does break through, we're going to have to get out. Because I'm not going to start catching pianos here. Okay. So we tested that line again. If it was really brave, I'd start buying more at this level, to be honest. Again, there's only so far a market can go in one direction. So bought 100%. No, I'm going to buy again. No, I'm not having that. So I bought again though, guys. And we're going to have to hold on now. So we've tested that level yet again. That's 3 times it's tested. We haven't closed below it, obviously, because we've got a long time to wait. So just going to have to be ballsy, guys, aren't we? We've got to be ballsy. Keep with our conviction. I don't see that as bad news. The FTSE is rallying, so I don't really understand why the pound would aggressively sell off too much. We've gone at a point in a straight line. Anything that moves in a straight line, 8% of the time, goes back to 50%. I can only stick to the basic rules of trading. So I bought at 100%, I bought back at the low. Market still, you know, it's looking test higher, but you know, someone's going to find some value there at some point and buy some pounds back up, aren't they? Okay, Mr. C, let's say you have a fixed target. How do you calculate the spread so TP can be hit? Not entirely sure what that means, to be honest. I don't know. I don't know what you're trying to ask me though. Oh, take profit. Right, okay. Well, you know, you have your stop in place, you know. if the market goes much further than this, you know, I don't have any levels down to here, so that's the unknown. But I know this is a good level. I know this is a good level. So this is the area of interest I go to buy. This is my target. So you work it out. If you're trying to make 50 ticks, you don't go more than 20 ticks offside. So averaged in, that would be down to here. Okay, that's how you do it. You know, you manage it on your ratios of where you're going to go. So, okay, markets, you know, aggressively still coming back up. You know, coming back off. But I mean, it's going to have to stop at some point, guys. So it just depends. I mean, if you think fundamentally this is really negative news for the pound, then you know you're going to have to get short and stay short. I don't think it's that bad personally, and I put my trading accordingly. So we're trading below the kind of, you know, my target level here. So we haven't got much room for error here. You know, the market continues to make lower lows from this point. Then, you know, again, we either bite the bullet and buy more, expecting that the 80-20 rule that, you know, I'm so keen on works, or we get out the trade and wait for it to come back up. Okay. Maud's just saying she's in the wrong chat here. Is that time now, guys? We're pretty much on time, are we? I'm going to stay long for the time being. I won't be much of a trader if I got out right now. Again, I'm going to monitor this, but again, my key target to get back out is still back up here at 1518, and I still see the market really hovering around here for the time being. So, is that time for us, guys? Is that enough now, Maud? Okay, the market's still, you know, again, it's coming back down here. You know, it's still aggressively selling off. So we don't really have any levels down here. So really, the market, if it's going to go anywhere and turn, is going to be down here at 1618, the Fibonacci extension. So remember, you know, markets can only move, you know, directionally ever. You know, I mean, we've gone down nearly 2 points now in a straight line. I can't really see that continuing. Okay, guys, is that time now, Maud? I think we're pretty much under 45 minutes now. Okay, looks like going to hit support 2 on the futures. Yep, absolutely. Okay, guys, well, like I said, always interesting, isn't it? Always interesting that you know, we trade these bits of information and we trade the markets. Nothing can move indefinitely down in one direction. I don't think the news out from Mark Carney in the Bank of England today is that negative for the pound, but the market's certainly selling off on the back of it. But let's keep our conviction. I'm going to stay long for the time being. Follow me on Twitter at Steve Ruffley, and I'll keep you posted with what the trade is. But I'm staying long, and my target's back up here. I'm not being frightened out by the market. It's not a chance. Okay, guys, listen, thanks for your attendance. I really do appreciate it, and I'll see you all very, very soon. Hope you've enjoyed the event, and thanks to Maud and the guys. Market's spiking a little bit back up now, so again, our initial target will be support become resistance, but again, got to stick on with our conviction, guys. Markets can't continue in one direction forever. Alright, guys, have a great afternoon, and I'll speak to you all very soon. Thank you.